Hello and welcome to Manic Money Finance. I'm Money Mike, and I'm here to tell you about our current economy and financial situations. This is not financial advice. Do not get me wrong, but I am here to show you how to get rich. All right, it's been a few days since we've been here to show you how to invest in a nice portfolio, how to build a beautiful portfolio, the best portfolio. Sorry. Sorry, I got into a thing there. Oh, let me bring up the old laptop here. We gotta get the charts up. We gotta get the stuff up. So, if you don't live under a rock, um, you know about trade wars. If I have to say, not the worst kind of war there is. Not the worst. We could have nuclear war. We could have a cold war. I hate the cold. Why would I want a cold war? You know what I mean? Like, maybe we could have a hot war. Whatever that means. But I'm just here to talk to you guys about the Trump trade wars, the tariffs, how that's actually going to affect our economy. Right? Um, so I'm gonna go on the record right now. All right. I'm gonna go on the record. I'm gonna say currently that it's gonna be a giant nothing burger. It's literally gonna mean nothing. Absolutely nothing. And that's okay. You know? Sorry guys. I'm just checking some different things here, making sure things are good. Let's bring up the chat. Bring Zaltan. Welcome. So, the tariffs were all the rage this weekend. All right. So, I mean, you could literally just punch trade wars, all right, into your Google or whatever search engine you may use. You know, people use different search engines, and you're going to see all this stuff, right? We're going to go to the news, we're going to go to top stories. And I mean, as you can already see, right? So, if you have been living under a rock, I will tell you point blank that Trump was threatening to put tariffs on Canada and New Mexico, right? And 25% tariffs on Canada and New Mexico. Or no, and on Mexico, not New Mexico. And I mean, I just saw this as being a big nothing burger because we have NAFTA, the North American Free Trade Agreement. That was codified into law by Congress and the Senate. Not an executive action. And as you know, most of the time, executive actions cannot overrule codified law that has been voted on. So I think it was all just posturing. And Canada and Mexico are falling for it. Hook, line, and sinker. Audio levels are good. I just had to check the audio levels. They're great. So as you can see, top two stories right here, 2 hours ago and an hour ago, U.S. pauses tariffs for 30 days on Canada and Mexico. So Trump was basically pushing this as a tactic, right, for securing the northern and southern border. If I had to be honest, northern border, you know, most of the things probably illegally crossing the northern border are moose and bear. You know, moose and squirrel. We do not have to worry about moose and squirrel. So this is just, it's, you know, as you can see, they're already pausing the tariffs. This is just posturing. You know, this is just a way for him to exhibit his power over our northern and southern allies, our neighbors, right? But I'm going to show you right here the S&P 500 chart here. They reacted, right? So in overnight trading, so from Friday to Monday, it's usually a big gap. It's usually a decent gap. Nothing this crazy. So on Friday, the S&P 500 was managing to maintain that 6,000 range. So this is the SPY. It's 1/10 of the S&P 500. But you can see in the top right corner, the S&P 500, 5,994. So it was over 6,000 and it was maintaining. Obviously, this is a pretty ugly chart. It probably wasn't going to stick around. And of course, once you throw in some tariffs and Trump, Canada, Mexico, this is what you get. I'm making the call right now. I think it's a big nothing burger. I don't even think he has the power to actually do that with Canada and Mexico in particular because of NAFTA, as I already highlighted for you. China can do it all day. China, definitely all day. That's why China's only 10%, right? That's our biggest trading partner. Biggest trading partner. It'd be stupid to hit them with a 25% tariff. Granted, they don't buy much stuff from us, from the United States, us, haha. But still, don't let this make you forget that in the 1960s, NASA brought cats into zero gravity just to see what would happen. It's the only reason they did it. They just wanted to see what would happen. Will it still land on its feet? Spoiler alert. No, they did not. Turns out, zero gravity is their Achilles heel. So as you can see, the markets, like they do, they overreacted. It was ugly. It was horrible. If you were a boomer, you were thinking, I should probably sell now before this economy gets completely destroyed. And as you can see at the end of the day, there was a massive red candle. Massive red candle. Scary to see. Am I right? So it's an interesting predicament we find ourselves in. But like I said, it's going to be a big nothing burger. Don't worry about this stuff. Obviously, if you really wanted to find a way to play this, this tariff trade, you could actually go back to the top 10 2025 video I did and look at lithium. So I think out of all the commodities out there, the one that stands to gain the most from a trade war would be lithium. Only because most of it comes from China, refined lithium. And if we were forced to get that from somewhere else, not only that, 10% gain, you might see a 10% gain in lithium just for that, we would have to go to other countries where it's more expensive. And obviously gold, silver, also two other very good plays. Gold lost a lot of value recently due to oil going down. As you can see, crude oil has reached a low year over year now down. It's down now year over year. $72 a barrel for crude oil average price. Obviously, your Brent, which is your your Northern European Sea, Norwegian, oil, is a little bit higher. I don't see the Murban crude on here, which would be your your Middle Eastern oil. But natural gas is down, gasoline is down, heating oil is down, coal, which shouldn't even be something we use anymore, is also down. But you can see these things, all these commodities, energy commodities, they are now starting to go down. Trump's in office. That's it. I knew that's how it was going to be. I was shouting that out. We know. I know. And if you're watching, you know. So certain commodities, right, that might actually not go up in a trade war would be the commodities that we are getting from South American countries, from other Asian countries besides China, Taiwan. So the chips are still going to be cheap. We're getting cheap chips. We might even get cheaper computer chips due to this. You heard it here first. Cheap chips. So cotton, coffee, orange juice, rubber, which comes from, which mostly synthetic sources now, but whatever. Milk we're making here, cheese for the most part we make here. Palm oil, I think will go down. That's coming from South America. Lumber, America makes a ton of lumber. We really don't have to depend on any other country for lumber. I don't think these tariffs and these trade wars, I mean, even if they were to happen, this stuff's just going to start getting made here in the United States. Capitalism, capitalism, they're going to make it here. Who cares? It's going to suck for a little while, but at the same token, I don't think it's the end of the world. I don't think this is the next Great Depression like some people are saying. I don't think a trade war equates to an actual war. That's just ridiculous. When he was president last time, he was going toe-to-toe with China the entire time, to the point where China stopped buying U.S. treasuries. And everybody thought, oh, man, China's not buying our treasuries anymore. Look for the collapse of the U.S. dollar. Turns out China's economy kind of sucks a little bit. And it didn't matter. In fact, after China stopped buying treasuries, right? Get this. The U.S. dollar became stronger than ever. Almost like they're a country that manipulates currency. Right? Poor cats, right, Zoltan? Poor cats. I know. I hate that. Just so you know, when I'm going through charts and, commodity prices, I'm going through these things, I am on those pages. I will go back to my stream occasionally to check chats. But obviously here, I try to deliver people the news. It's one of those things. But yeah, the cats. Meaning it's not nearly as bad as packs of stray dogs that are taking over most of the major U.S. cities. But if I talk about that here, I will get shut down. So, nextly, most people know from watching this stream that I do talk about the S&P 500 and Bitcoin relationship, how they seem to go hand in hand. And if Bitcoin tanks over the weekend, like it did this past weekend, Bitcoin tanked about 10,000. Yeah, close to $13,000 a piece. Bitcoin tanked from 105 to 95, 107, 95, something like that. At least $10,000. The S&P 500 will tank on Monday when it opens. So you saw the S&P 500 chart, how it dropped to probably, 5,008 and change. And you see this drop here. This is the third. This is the night before. And you see on Sunday night, it just tanked. We actually hit 92.5. 92.5 from 105 a couple days before. This is insane. Absolute insane volatility. I mean, look at the 5-day chart. This is wild. Wild. On the first, we were up here, 105.8. Less than 2 days, 48 hours later, 92.5. And this was a result of, Trump talking about, tariffs and trade wars. I don't know why Bitcoin dumps because of that. This is a way to skirt, monetary policy, sanctions, etc. So why wouldn't you invest more in Bitcoin and cryptocurrencies? But I digress. So we watched Bitcoin hit over $100,000 again. And the S&P 500 made its way back up to $6,000 or almost. So in overnight trading, right? Aftermarket trading, which you're not going to get here on TradingView for some reason. I don't know why. TradingView. Fix your stuff, dude. But right now the S&P is trading at 6,010. So Bitcoin regained that $100,000 level. The S&P 500 has also regained the $6,000 level. This seems to be a point of congruency for the two. That is a hypothesis I have been talking about for quite some time on this channel, how they go hand in hand. And there would have to be some really bad cryptocurrency specific news to make these two diverge. Or on the other hand, some bad traditional economic news to make, these two diverge. But so far, we had trade war news and they stayed trading basically hand in hand. But I made a lot of money on S&P, short-term S&P 500 options by looking at where Bitcoin was going the weekend before, the night before, etc. And you can see Bitcoin, doing its thing in the morning. And sure enough, I bought some puts or calls, depending on where Bitcoin was going, short-term. And boom, boom. They play out nicely. Little pro tip. So yeah, most stuff was down. So Apple, Tesla down. Netflix has been kind of just marching on. They don't care. They're not something that's going to get tariffed. They're a movie streaming site. They're looking good. Obviously, gold was up today. And Forex, the US dollar, killing it. They're up against almost every other currency. It's wild to think about. It's wild to see. But yeah, so, obviously, it's hard. Sometimes it's hard to predict these markets. I get it. Especially with our current political landscape. It's pretty interesting to see this stuff play out. Most of your stocks that went nuts today kind of had nothing to do with any of this. Obviously, you had your quantum computing, you had your quantum computing stocks, stocks that reported earnings. Intel is one that I really like that traded pretty crazy today. Large volume. It didn't really go up or down very much. I've been following Intel. I think Snapchat is actually a good play right now because that's something that is outside of these tariffs. And as such, it's kind of insulated from anything having to do with trade. Let's take a look at Snapchat. What do you think its ticker is? If you said Snap, you were indeed correct. So in the past 5 days, it wanted to make some moves up. I like to back it up. 3-month chart, 6-month chart. As you can see, what we have here is a concrete bottom around $10. A nice round bottom. And as we know, round bottoms make money. So you got these nice round bottoms. Granted, this looks like a weird head and shoulders, inverted head and shoulders. On the 3-month, that really doesn't matter. What we are seeing here, granted, we had the dip today, which is going to happen. It's going to dip with the markets. Still some nice green candles afterwards. This looks like a flag right here. All right. So we have this low here going through to that low here. And while this 5-day chart doesn't look promising because of the way the tops are playing out, actually, rewind, back up, rewind, back up. So I can show you guys how easy this is. All right. This is how easy this is. So you want to look at near-term price action, right? You look bottom, just extend that line as far as you can. All right. So now you have all your near-term price tops. And granted, I'm only looking at the last trading week, right? And you got here. So this is what we call a wedge, right? Most stocks are going to play out in this wedge. Most stocks are going to play out in this wedge. Pro tip, okay? This is not financial advice, but this is usually true until it's not. because that's just how stocks go. All right, this is how investments go. Obviously, I'm going to be kind of changing. Actually, no, we're going to talk about that later on. So the way that this plays out, right? We hit a rock bottom today with the stock market. So what you're probably going to see, let me see if I can just brush. Oh yeah, okay. So we might get some of that. We might get that, right? But we also could get this, you know? And it could ping pong, and it's going to tighten up. It's going to really tighten up. And when we're going to get to this point out here, right? This is just all about averages, volume weighted average price, everything. It has earnings tomorrow too. So obviously keep an eye on that. Could be pretty nutty. This is all volume and weighted average price stuff, right? And it's going to condense in here. The price action is going to start getting tight. You're not going to get this type of volatility eventually. It's going to pack in there. Kind of like, honestly, this right here does kind of look like a wedge. And you might get, a small one. So you might get some volatility here. It's probably going to go up to these levels here. All right. I mean, obviously, if earnings are really good, you could see it just freaking skyrocket. Market cap is 18 to 20 billion. But if you follow, most rules, what you're going to see is a consolidation. And then usually what'll happen is, hopefully in this time, we can get a good idea if it's going to go up or down. But it will literally, when it gets to this point, it's literally going to go up or down. It could be either or, right? It could be either or. Obviously, if it's ascending like this and you don't have much downside to this wedge, most likely this thing is going to pop. And honestly, Snapchat typically does pretty good after earnings. You don't believe me? Here's one earnings. Boom. Here's another earnings. Boom. Then we got earnings tomorrow. And back it up and look at the 5-year. All right, earnings, upswing. Earnings, this one not so good. Earnings here, upswing. Not so good. Earnings here, upswing. Okay. All right. It went up in the last earnings, so obviously it tends to go 50-50. All right. I was wrong about most of the time. It's important to look at this stuff, right? I can actually, on my Robinhood app, right? On my Robinhood app, I will bring up the Snap because, obviously Robinhood's just easier for me to bring up on this laptop to take a look. But we will go and look at earnings on Robinhood. Oh, let's see. People are selling it. The past week, people are selling Snap. Hedge funds are basically 50-50. They slightly increased their ownership. Insiders, it's a negative based on insider trading, especially in February. Which, I mean, can't really mean much. It's not, I don't see insiders unloading. It's just small, probably pre-planned trades that they do. So their estimated earning per share is just 14 cents a share, which is huge. That's an increase year over year and everything else. Back when Snap was trading 15 to 20 bucks a share, they still had negative earnings. 15 to 20 bucks a share. We hit 14 cents positive earnings per share. I mean, even if they were just to meet their earnings and their analyst expectations, you could see Snapchat go to fifth. You could see Snapchat go nuts. I think Snapchat. All right, it will be tomorrow after hours, Tuesday after hours. Let me see what time the earnings call is. because the way they're presenting this data seems a little strange. February 4th at 5 p.m. So yeah, tomorrow afternoon, Snapchat earnings. So something to keep in mind. I might actually get in on this. And I'll tell you how. If you want to get in on a pure earnings play, I like short term. So I would go for options and not financial advice. I would go for options expiring February 7th, right? Calls, because I think it's going to go up, right? And right now, $12 calls are trading 73 cents a piece. So from there, basically, you need this thing to hit $13 to make good income on it. Obviously, I would wait and look at the options tomorrow and look at where this is trading. I mean, the crazy thing with options is the farther into the money you go, the less time value you're paying for. So if I were to buy $9.50 calls, which are $1.80 below the current market price, I'm paying $216 a contract, $216 per share, right? Which is still significantly cheaper than buying the shares. And then at $9.50, share price currently at $11.30, if this thing were to go to $13 a share, those $2.16 calls will now be worth $4, double your money. You couldn't do that buying the shares. If you bought shares at $11.30 and it went to $13, you're only going to make $2, $1.70 a share. $1.70 a share for buying shares at 11 something. This is why I love options. That's why I love options. Don't worry. I will eventually come out with an options video explaining options and showing you how to make good money with options. Not financial advice. It's not happening anytime soon. It's not happening in the next few weeks. I still have 2 different videos that I'm working on currently. Basically trading the stock market for dummies. And I have another video where I'm going to go through all the different brokerages. I'm going to try them so you don't have to. And going over all the pros, cons, and everything else. So I'm literally going to start a freaking account with at least 7 different brokerages. I already have experience with several of them. I don't need to do that. I want to cover, tasty trades because they're more options centered. I'm going to go over Charles Schwab because I already have him. I'm going to go over Robinhood because I've used Robinhood for years with success, with great success. Oh, it's going to be beautiful videos. But my next video after that, we'll be talking about options. At least my informative videos. I will probably make another video in the time period before that, how to make big money off the next Bitcoin bull run by not investing in any cryptocurrencies whatsoever. Because, there's alternatives. You don't have to get into crypto. You can get into stocks. You can get in Bitcoin adjacent stocks. You don't have to go nuts with the crypto. You just don't. You don't. The best trade, one of the second best trade I ever made. The first best trade I ever made was on crypto. The second best trade I ever made was on a Bitcoin adjacent stock. So that was after I discovered options. Obviously, because I caught Moderna at February 2020. If I had known about options then, I probably would be a millionaire right now. But I did not know about options then. So I was paying $18 a share. And so when it hit 50 or 60, I got the heck out. But you think if I could have bought the options instead, some 1-year leaps? I love my leaps. 1 year, a little over 1 year. You pay less taxes. It's a beautiful thing. You sell them after a year. That stock went from $18.50 to $250 in 1 year. If I had bought options, 10 grand would have turned into at least $400,000. I'd be a millionaire right now if I knew about options back in 2020. But I did not. So now I'm looking for the next Moderna, and I will find it. I will. find it. Oh, all right. That got a little dark there for a second. That got a little weird. We're here to bring you guys the news, talk about different stuff. You know, obviously, Trump trade war. You thought maybe, just maybe, a Trump trade war was going to revitalize a little bit the oil markets, but the oil futures are even worse than the current oil prices, right? They tanked at a point today. They dropped pretty hard at one point today. And it was only 36 minutes ago. Ooh, guess what time it is? It's 8:30. You know what that means? It's Bitcoin reversal time. It is Bitcoin reversal time. All right. So anybody that watches the show knows that we have been watching this thing reverse at 8:30 p.m. almost every single day, but especially during trading days. All right. And as you see, we're getting a little rising wedge pattern here. And some rising wedge pattern here. That's nice. This is near-term price action, okay? But this is definitely a rising wedge because you see the slope here is greater than the slope here. It's how it works. And this would seem to indicate to most traders that Bitcoin's about to go up, right? So people are buying in. People are setting stop losses. People are setting stop losses. Where's the brush? Down here, right? And then obviously, just forewarning, the reversal can really happen anytime after 8. So technically, I might have missed it because this thing was dropping for the past couple hours and it bottomed out at the 1,850 level. And it's been going up since. So this reversal might already be playing out, and this might be it. And obviously, this rising wedge is just confirmation of that move that we're going to see. As I tell you guys, I cover TradFi most often, but when I'm doing the Manic Money Show at 8 p.m., after 8 p.m., I can't show you a live chart playing out in a way that I predict. With it's 8 p.m. Eastern Standard Time. Everything's closed. The future markets are closed. All you get is Bitcoin. This is what we get. Cryptocurrency. They're still trading. I'm not going to bore you with Forex. Who cares? Forex. So we can talk about getting a 2% gain on a week traded. Oh, 2% gain in 1 week. That's great. I mean, few weeks ago, I tripled my money in one options trade. Tripled my money in 3 days. Freaking Forex. And that was stocks. Thanks again, BlackBerry. So yeah, this reversal might have already played out. Usually it happens at 8:30, 8:40 now. It doesn't seem like that's going to happen. It seems like this reversal played out shortly after 8. Like I call it the 8 p.m. reversal, but lately it's been happening closer to 8:30. The past couple nights, it's actually it's been closer to 8 p.m. So obviously, you knowing this, way to make money. You see this thing going down. A lot of people are going to be selling, right? So short sellers are going to be selling as this thing goes down. And if they're jumping in, if they see this playing out here and they decide to jump in here, that's their stop loss is going to be somewhere in here. And as it goes down, they're going to set another stop loss. So what happens is the algorithms in the Asian market and the high frequency trading bots will start buying this thing up, and they will wipe out those stop losses because the stop losses on the short sellers means more liquidity to the upside because they have to buy to cover in. Beautiful thing. Beautiful thing. See this chart? It's a beautiful thing. So whoever did buy in down here, 108.50, congratulations. If you're doing some leverage trading, fantastic. Good for you. We're going to leave that site. And we're going to talk about basically with the current financial markets and stuff. I'm always going to cover what's going on in the markets and everything else, but I'm thinking that it might be better for this channel, especially to start out here, is to preach a more measured approach to the markets. So obviously I talk about, I realized this in my own trading the past couple weeks. I was basically going nuts. I'm sick and tired of working, people. I'm sick and tired of working a 9-to-5 job and being taken advantage of by a boss that gets to make good money off the beautiful fruits of my labor. All right? I'm sick of this, people. You should be too. So, my trades, as of late, and when I mean as of late, I mean literally I kind of went nutty for a week. They've been tinged with a desperation that to me is ugly. It smells bad. It downright disgusts me when I think about it later. Tinged with a desperation. Buying into these crazy little Chinese stocks. Buying into these penny stocks that are just way oversold. Not being patient with it. Not analyzing. Not biding my time to get in at a decent entry price and to doing myself a favor, right? It is something that I tend to preach on here, but I'm the way I'm looking at it now, and the way I think would be the best possible thing to do, because we want to look at sustained, healthy growth of a portfolio. So I'm going to be changing kind of my direction for my personal investing, and in that I'm going to be, obviously explaining that to you guys. So, by the way, it's a new week. We got the small account challenge. So the small account challenge is something I started just over 2 weeks ago. Basically, about 2 weeks ago, Monday today would be the beginning of the third week. But I started the small account challenge. I started it with $30. Right? Put $30 in that bad boy. And I'm happy to tell you right now, the small account is at $31.91. 2 weeks. We are up. What's $2 out of 30? 6%. Up 6% in 2 weeks. And because it's Monday, right? And because it's Monday, I got to do another transfer. Another $15. Right? Because that's nothing. That's nothing. So another $15 transfer. Right now. Boom, bada bing. Submit transfer. Your transfer has been successfully placed. Beautiful. So I don't know when that transfer's gonna go through per se. Yeah. Pending. It's gonna go through tomorrow. So, boom. There we go. In 2 weeks, $30 went in. We're at $31.91. Another 15 cents in today. So at 3 weeks, do the math real quick. $46.91. So 3 weeks, put in 45. I now have $46.91. And you already know what I'm buying. You already know what I'm buying. Just in case you don't know what I'm buying. All right. Just in case you don't know what I'm buying, I'm going to show you what I'm buying. Because the first thing that I'm buying is my number one for 2025. My number one stock. Obviously, I think I jumped into this one early in the week somewhere in here. So I think I'm technically down like 10 cents on $15. Not a big deal. As you know, from looking at the 5-year chart, nothing has changed with this company from here, from this craziness. Nothing has changed at all. They have plenty of cash on hand, and they're partnered with Merck Veterinary Science. So the past 3 months, you've seen when there is price action, it gets nutty. It gets nutty quick. So, I mean, there is a possibility if it were to go from 12 to 15 cents again, I might sell in the short term and buy back in, just because on a $15 investment, that means I will have made, $4 to $5. But that's a long term. Most of these things that I'm jumping into right now with that, small account challenge is going to be long-term stuff. Zomedica is one thing, right? But as you know, and Zomedica is is a pretty safe bet. The other thing I'm getting into is this bad boy here. That was a 5-day chart. Let's look at the 6-month chart. Is because these don't have tons of volume, because they're warrants, but Bitcoin Depot warrants, right? I'm betting on this thing going up when Bitcoin goes up. Not to mention, because as you know, Bitcoin Depot is reporting earnings coming up here soon, and they will probably be the first positive earnings since the company's inception back in May of 2022. May of 2022. These ones you're only going to be able to get on conventional brokerages, E-Trade, Charles Schwab. Obviously, I don't know about the other ones, but I am going to find that out when I go through all the different brokerages for you guys. Obviously, I'm running multiple channels now, so I got multiple videos I'm working on. And I'm going to bounce back and forth between what I'm making videos for. And obviously, because the Manic Money videos are very easy to film, I will still be pumping out a decent amount of those. But let's check out some of these other ones. Well, Alarity didn't do so well, but you see at this wedge here, you see this wedge that I drew in here. It got to a point, it was trading inside this wedge, and then it gets to a point where it can't keep trading sideways, and it's going to have to go up or down. And in this particular instance, it went down. Right? That one is one of my top 10, but it's long term. It's long term. You can relax. Intel. Like I'm looking at 6-month charts. 1-month chart. Intel is showing signs of life again. I mean, obviously this is a gap up, so it had to fill. From here, it's probably going to keep going up. Let's be honest. I really like Intel as far as chip makers go. They're kind of an underdog. BlackBerry has been beautiful. BlackBerry has been nice. This thing should have been slowly marching up. I mean, look at this. I've been talking about BlackBerry for a long time. For over a year. I think, we might not see $28 again. Don't get me wrong. We could see that this year. What I meant to say is we probably won't see 28 this year, but we could. But you see this big gold cup and handle forming. We might get some chop. Obviously their earnings were decent, but they weren't blockbuster. They're positive earnings. They're a positive cash flow company again for the first time in years. Their market cap is sizable at 2.5 billion. It's pretty sizable, but and I have to apologize because all right, Kodak, 6 months, another one I've been talking about. I'm talking about this one for a long time. I mean, I don't know what to tell you, people. Should have been watching this thing a long time ago. Could have made lots of money. Lots of money. We're trading like it's 1999 over here. We're buying BlackBerry. We're buying Kodak. I don't care. I like the stock. So I apologize because I didn't have a ton for you today. Trump trades, tariff, trade wars. That was the biggest thing and how it played out in the market. Oh, let's one last thing before we sign off. Let's go over economic data, right? We got economic data, people. Oh no, I do not want to subscribe to Market Watch. I just use you for free and just show you to all my viewers. That's what I do. All right. After showing you all those stocks that I told you to buy, Kodak, BlackBerry, these stocks I was talking about 6 months ago, long time ago, telling you to buy, you didn't buy. Now they're up a bunch. Now, not financial advice. I'm not technically telling you to buy them. It's entertainment purposes only. Now I'm showing you Zomedica, and I'm telling you I bought Zomedica. I bought it. Not financial advice. But yeah, you know what I'm saying here. So what do we got? Monday, this stuff already happened. Manufacturing PMI. Obviously, it was better than last time. It's good. Construction spending, better than last time. Better than forecasted. This might have helped break people out of the Trump tariff trade war FUD. But still, auto sales to be announced. Why would you even put it there then? Still, when it turned into a big nothing burger, and people overreacted, they sold the rumor, and then they bought the news. That's what happened this time around. They sold the rumor with the trade war crap, which isn't going to happen with the NAFTA in place. And then they bought the news today when everything came in, heads up, looking good. So tomorrow we got job openings for December, Tuesday. And those things keep going up. It's kind of insane. People can't fill jobs. Starting to think that they just put job openings out there for the heck of it. Factory orders, people think they're going to go down for America. We got some Fed people, Atlanta, San Francisco, Fed Reserve Vice Chairman. We got some Fed speaking tomorrow from 11 a.m. to 7:30 p.m. Usually when they get on a mic, it's not great for the markets. They're economists. They don't care about the stock market and how they affect it. All right. And like I told you, I think the Federal Reserve partner banks, the member banks, have bought up a ton of stock to prop up the stock market. And if these guys feel like selling that stock, guess what? Very bad for people like you and me with our retirements into the S&P 500. So I'm going to be looking at ADP unemployment on Wednesday. U.S. trade deficit. It doesn't look like it's going to be good compared to last month. So that could affect stuff. PMI. More Fed people speaking. They really need to stop speaking. Why they're speaking all week is beyond me. They're all doing a press tour after Jerome Powell last week. This is still a lot of speaking engagements for them. We have initial jobless claims on Thursday, like always. Who cares? U.S. productivity coming in on Thursday as well, which is down quite a bit. So if it's down even more than that, it could really affect it. And then U.S. unemployment report on Friday. So I think Friday is probably going to be the most important day because this is going to be seen as basically like a litmus test, right? A little bit of a litmus test for Trump's presidency, unfortunately, even though it's only been less than 3 weeks. People are going to be looking at this to basically kind of gauge the direction this economy is going to go for the little guy, right? And we're looking for, unemployment and everything to basically remain the same. Hourly wages year over year, it'd be nice to see those go up. It'd probably be better for the economy if they go down. Let's be honest, for the stock market if they go down. So then the consumer credit. So Friday's going to be a big day. Consumer credit's big. You see, last time it was negative 7.5 billion, which was wild because that was November. People should be Christmas shopping. Now they're saying for December, for positive 14 billion. Positive. That is wild. We're not even going to look at next week because who cares? It's Monday. So, sorry. Yeah, that's what I see. That's what I see. Friday's going to be the day. Monday's over. A lot of this is a bunch of nothing burger. Friday's going to be the day. So stay tuned Friday. If you make your money before then and you think it could be a bad day, get the heck out. Why not be safe? Why not be safe with your money? Right? Not financial advice, but why not be safe with your money? Basically, my biggest thing with this show tonight was to highlight to you how world leaders and this crazy economic stuff we see can really affect the direction of the markets and get people overreacting to nothing. To basically nothing. 30-day pause on tariffs, which probably won't go through anyways. A judge will probably block them because tariffs through an executive order, it's dicey. It's dicey. That's dicey lawfare. At best. A little shisty at best. So yeah. Just to kind of highlight to you guys, be careful out there. And also look at world events and what's happening in the world, because that's going to affect stocks, Bitcoin. Why do you think Bitcoin dropped this weekend? Dicey little onions. Dicey like onions. Yeah. We're just going to peel this back layer by layer like onions. Right? So yeah, it's interesting, just you got to be careful out there. And you got to see Bitcoin, which is a cryptocurrency, which shouldn't be affected by world trade. It has nothing to do with it. Shouldn't be affected by these trade wars. And yet it tanked all weekend because of Trump and tariffs. It's so ridiculous. It's already made most of that money back today now. It's wild to see. If you were one of those cool cats that played it cool or sold before, like a G, and you didn't get wiped out, now that Bitcoin's back at 1015 and the S&P 500 is back at 6,000, over 6,000, and even if you didn't sell and you're just like chill, daddy, chill, and you just bought more at the dip and averaged down like a freaking badass. Oh God, I said a bad word. I mean, good for you too. This is, this stuff's crazy. This stuff is insane. But yeah, that's about all I'm gonna have for you today. Another hour-long show for you good people. And remember what I always say: stay frosty. Go check out the NASA cat experiment because the video footage is fantastic. And stay frosty, my friends.